analysis. What exactly do you do with this and how do you use it? What does it tell you?
Well, this actually was used by Goldman Sachs for many years, and when I left, I took it with me because it was my system. I also had, even with all the PhDs from Harvard, I had a hard time to explain it because the first time that you have to accept is that there's no free choice for a big part of what happens in the world. If there's free choice, it's very hard to predict. So it's based on the fact there's no free choice in financial markets. So if there's no free choice in financial markets, then you can start to figure out what the underlying system is and how it functions. So if there's no free choice in markets, it means is that markets go up and down with a certain momentum. Maybe you remember from your school, they taught you if you shoot a bullet in the air, how far it will go or high it will go. That means it's the momentum that the bullet or a stock like IBM takes off will give you the end goal and the end price, so that you know. And then you can also calculate how long it will take for that bullet, or in this case IBM, to reach that target. So it's all based on the fact that there's no free choice, which you don't really like on Wall Street, because in Wall Street, if people make a mistake, they say, well, nobody could have known this. And I say, well, that's a poor excuse. And one of my critics is that on the television, on the media, there are always people that come up and say things, but they don't show us how they get to the result. Nobody ever shows, let me show you how I calculate this. They just say, I think the market goes up, the market can go up another 10%. They never explain anything because they just put the thing in the air and they says, well, that's what I feel. So I developed this based on my assumption that there is less free choice than people think.
I wanted to start off here with what's happening out in Europe. We know the UK, they're going to be leaving the EU. And we can see Theresa May, she is getting ready to put forth and implement Article 50. We know that the Parliament has to vote right now. And from your models and everything that you've been looking at, do you think this is going to spread across Europe? And if it does, what is the fallout from countries leaving the EU?
Well, for my cycle work, I looked at the populist movements, how long they take. The last big populist movement was in the 60s, and it takes about 55, 60 years. So it's time for new populist movement. So this is not something that's going to be over very, very, very soon. I personally think that it's going to break up the euro. I have been talking years ago that they're going to split up in a northern euro and a southern euro. I have cycles on the euro that are bottoming. We're long the euro. And that could mean that something is going to cook over there. Now, for instance, I'm from Amsterdam. The Netherlands is also against Europe, actually, and the biggest party is against Europe. And Italy actually is the main player over there because Italy is so weak, the banks are so weak. And if Italy doesn't go back to the lira, then I don't know how they're going to get themselves out of it. If Italy goes, then everything goes. Then it's all finished. It was a nice try. I personally advise the members of parliament in Holland about these things. And I can tell you that I found out, especially when there was a crisis with Spain and Greece, that the members of parliament have no clue about the financial consequences. They have some economic advisors. And I try to explain to them that if there are 4 big guys in pajamas in New York who decide we're going to sell short the Italian bond market, interest rates go up, and you can ask 10 times the economists why it happens, but they don't have an answer. And a lot of countries and governments refuse to bring in financial people. Now, thank God, Trump understands that you have to bring in people who know about finance. But since the European Union is ruled by people in Brussels who have no clue about finance, I don't think it's going to end well.
Do you think that when this starts to fall apart in the European Union, do you think it's going to come back and hit the United States with what's happening out there?
Well, for years I have projected a major top in the equity markets the third quarter of this year. Something big is going to happen to bring down the Dow, as I've been saying, to 5,000. Now that's a big drop. And that's going to take 4 or 5 years. So we're in for a very hard time. What is going to trigger it, I don't know. I say, it could be a strong economy and then interest rates go up. or it could be a weak economy, going to have deflation, or it could be Europe, it could be anything. That's not usually not my work, why it happens. My work is what's going to happen and when, and why I leave that up to the papers and the media. And, the end of the year, we'll know why it happened. Now, if Europe breaks up, the interesting point is if it breaks up in a northern Euro, let's say Holland, Germany, Finland, and those countries, that's going to be the strongest motor of the economy of the world, I think, even stronger than China. And then the weaker countries can devaluate their currencies and get out of it. So from that point of view, that actually would be the solution for getting out of the mess in Europe. How it will influence the rest of the world, it's a new situation that we have to see how it's going to develop.
Okay, you mentioned the market, and you mentioned that the market's going to come down. Now, we just saw the market hit 20,000 points for the first time ever. There are other people calling for the market to go way up much further than that. So you're saying from your work that the market is not going to keep rising. It's going to fall eventually.
Eventually is the third quarter of this year.
So you know that the actual time frame of when this is going to happen.
Right.
So is this going to come straight down to 5,000? What'd you say, 5,000 points? 5,
no, it will take it till 2021.
Okay, so we'll have
4 years.
So we'll have many different drops.
Yeah, and some rallies, of course, and to get the suckers in again and then sell off again, and that's how it usually goes.
So while this is happening, what do you think Trump is going to do? Because right now he's, telling everyone that jobs are coming back, manufacturing's coming back, and if the market...
Well, what Trump is going to do is probably what Obama did for 8 years, saying, well, it's not my fault, Bush did it. And I think that it's so fast in half a year that Trump can still say, listen, this is Obama economics, and I couldn't fix it in time. The
market's coming down. I mean, the first drop, do you have an actual estimate of how far it's going to come down the first time in the third quarter?
No, I have no estimate, but it will be much more than the usual 10%. When the institutions see 10% down, they start buying because a lot of times it stops at 10%. So in this case, they're going to be mistaken. So it's going to be like the 2008, 2007. It's actually the same system. I was on CNBC. I don't know if you saw that. 2006, the Dow was 10,000. I said goes to 14,300 by the end of 2007. Exactly what happened. Not because I'm so great, because the system knows how to calculate it. And this looks to be worse than 2007, 2008.
So when this market is coming down, what happens to the rest of the economy? Because right now, I mean, I've been looking at the economy, and many other people have been looking at the economy, and they see that, unemployment numbers, well, they're not really real. They've been manipulated and massaged to make them a lot better than they really are. Same thing with GDP. So what happens to the actual economy as the market's coming down? Well,
I also publish economic indicators. People can ask for it if they contact us. And we don't charge that for a couple of months. We just like to help people to see how it works. And all these indicators show that the unemployment is at the end now. We're going to have less employment, and we're going to have less GDP. And I wrote an article about it that I myself find it interesting because fundamentally I would say, it should pick up. But the cycle is such that the whole thing has to turn down.
Okay, so what happens to people's pensions? Because we saw what happened in 2008 when the market came down. People lost a lot of their wealth. Real estate completely took a dive, and people were just walking out of their homes saying, okay, the interest rates are going up. I can't take this. So what happens to the people's savings, their pensions, when this whole thing starts turning downward?
I think that this is worse. And why is this worse? Because we talk about the stock market, but the bond market is huge. There's much more money in the bond market. And if interest rates continue to go up, people in bond funds already down 20%. You don't hear them because they're used to a bond market bull market of 30 years, so they think it will come back. It will not come back. So the destructions of capital on the bond market is what's going to kill the people. And as far as I know, a lot of people bought 10-year bonds, not even talking about 30-year bonds, when interest rates were very low. So if the inflation goes to 2%, which is a very normal situation, they actually get nothing because they bought 10-year bonds that gave them less than 2%. So the big destruction is going to be the bond market. Now, the problem is in this, that a lot of people who are not very familiar with this, they don't buy a bond because at least they get back the principal. They buy into a bond fund. So they will not get back the principal. If bonds go down at a certain moment, they want to take the loss. And they have lost a lot of money because the bond fund doesn't give them back the principal. So I think that the disaster is going to be in the bond market, also the equity market. But in this case, it's worse than 2007-8 because the bond market is going to tank, and most people have money in bonds.
And what happens to precious metals? I mean, we've seen precious metals move up, move down. Where do you see precious metals like gold and silver going?
Yeah, we have a target of 2,500 of precious metals. There is a small chance still there that they will connect the currency again to gold. You know, that Nixon took off the connection between the two. And then if you calculate, then gold should trade around 30,000. I don't think it's going to happen, but you have to keep it in the back of your mind.
At this point, while everything is falling apart, do you believe the Fed is going to step in with QE4, or do you think they're going to start doing more quantitative easing?
No, I think they're going to step in. I think they still will see 2 or 3 hikes on interest rates. I don't think they... Well, this is going far out. I think my systems are better than those of the Feds, and they always look from number to number. I can tell you what's going to happen in a year and a half. So I think they're going to make the mistake if inflation goes to 2% to hike too much. It's still not going to be much, you know, a 0.25% or 50%. I don't think that's where the trouble comes from. The trouble will come from somewhere that we don't really know. Some outside occasion that we cannot predict for the moment.
Your system that you're looking at, it tells you many different things. What about what's happening around the world, like with Russia and China? When Obama was president, we saw the news talking about Russian aggression. You know, the Russians are coming. Do you see war happening anywhere around the world? Or has that completely disappeared because Trump has now stepped in and he says we'd like to have good relations with Russia?
Well, you understand there's no free choice. So Trump can't do anything. But there are interesting war cycles. 4 or 5 years ago, I remember Fox Channel already predicted that what was going to happen over here. And there's always a big war in the middle of the second decade of a new century. So that's where we are now. And if you only want to take one cycle, you can look it up. So 100 years ago was 1914, was the First World War that expanded into the Second World War. 100 years before that, 1814, was Napoleon. 100 years before that was 1714, 15. There was the Habsburg War. And if you Google and you say Google major war around 600, major war around 500, major war around 400, it's always in the middle of the second decade of a new century. Now, don't ask me why, because I don't know. So this happens automatically. Now, we haven't had a big war yet. We have all kinds of intermediate conflicts. But this is exactly what happens. If you have a stock market that's stopping, the indices are still holding up, but certain stocks are tanking. So all over the world, you see the separate stocks, in this case, the separate countries, already tanking and making the whole situation weak until a big thing will happen, which I predicted 4 or 5 years ago, which is going to be a fight in the China Sea between Japan and China over islands and what's going on there. And that should lead to a major war. Now, Trump can't do anything about it. I just want to say something about the Russian aggression. I have very good contacts in Russia. If you look at my website, you see me together with Putin on Channel 1 Moscow. We only took a small part, was 1.5 hours. I don't understand the Russian aggression idea because the Krim, how do you say the Krim in English? How do you say the Krim?
The Kremlin?
No, the Krim, the Krim, the part that they took over.
Crimea.
The Crimea, okay.
Yeah.
That for 1,000 years was Russian. And when Khrushchev in the 60s was drunk one time, he says, well, I give it to you away. So to say that it doesn't belong to Russia, I don't know where they get that from. And the problem with the Russians is that the Russians are surrounded by Muslim countries everywhere. If you look on the map, even on China, the west of China is Muslim. So the only way out is to the west. So that's why they're acting on Ukraine to see if they can come to agreement that they have a channel over there. The other aggression is talk about Syria. Well, Syria owes Russia, I don't know how many billions. And the Russians say that we don't know who comes after Assad. So it could be somebody worse. So let's support Assad so we can get back our money. So the same problem they have to Iran. The Iranians, they owe them a lot of money. So actually, you have to look at follow the money. And all these sayings about Russian aggression, I asked things about it, and I don't see what people are talking about.
I don't see it either. They're playing it up big in the corporate media, and Obama was playing it up very big, and they were pushing that quite a bit. But I don't see what they're talking about when they say Russian aggression. Everything that I look at that Putin was doing, he's trying to calm the situation down compared to what the U.S. was trying to do, where they were trying to kind of like poke him to make him do something. That's what I.
Yeah, but it's not even on the same level. I mean, well, maybe that's one of the problems of democracy in a country where there's less democracy. Although Putin has been elected in a democratic way, it's much easier. Look at the Chinese when they wanted to get their capitalistic input on the economy. They just force it on the population to get things done. The democracy has the problem. You have the Congress, you got the senators, you got new elections. So you're much weaker than countries with less democracy.
I wanted to ask you about the dollar. Right now, we see the dollar is very strong around the world. And there are people saying that eventually the dollar is going to disappear. There's going to be what they call a reset. There's going to be a new currency coming in. From your work, do you see anything like that occurring?
We sold the dollar by New Year's because then when the cycle topped and it hit our top price target. So I think the contra dollar at the moment is the euro, and cycles on the euro up and cycles on the dollar are down. So what you are talking about, what these people say, would be an indication that we would see gold go to 30,000 because then they have to connect it to real things like gold. I don't think it's going to happen. We always hear these stories about the dollar, but I don't believe that the dollar is going to stay strong.
Okay, so you don't think that the dollar is going to stay strong. You think it's going to weaken over time?
Yes. It's in a huge bear market for the last 200 years. Nobody has charged of the last 200 years. If you look at the buying power, there's almost nothing left. And there have always been rallies, but it's just in the bear market for a long time.
I wanted to go back to when the economy starts to fall apart in the third quarter. The everyday person who is not really paying attention, not preparing for, something that's coming. I mean, just like in 2008, there were many people out there and they were blindsided. They had no idea that this was happening, that something was going wrong. What is the everyday person going to experience when this starts to fall apart?
People are going to lose their job again. And the other problem is it depends what they did with the money. I said a lot of people bought 10-year bonds when I gave them 1.6, 1.7%. So that's a catastrophe. Now, if they're in stocks because they don't know how to make any money, I've been on television channels and they say, where do we make money? And he used to say, I'm Dutch. And we say, how do we don't lose money? Not how we make money. There are times that you cannot make money. You have to not to lose money. And Americans have a different attitude. So nobody is in the attitude of, I don't want to lose money. I understand it's a big problem. You had $1 million, you had $2 million in the bank. You don't get any interest. You're eating up your money. So you had to be forced to take a dividend on a stock of 2%, 1.5%, and you're going to be stuck with it. So those people are going to be in big trouble. Now, the people who didn't even have money to invest and lose their job, they're even going to be worse. Now, since a lot of people are entitled to having food stamps and having support, I think there's going to be a loss of social unrest because, I don't think the government can continue to pay those amounts of money. So I think from a social point of view, we're going to have a lot of problems.
So when you say social unrest, you mean like riots in the street or people going to Washington being very angry for what is happening because they're not getting the food stamp money, they're not getting their welfare checks? Is that what you're talking about?
Yes, they will say, because of Trump, the market came down, so they're going to be very angry. I mean, they're already very angry for no reason, and then they think they have a reason to be angry. And then, I don't know, Trump probably, if I was Trump, I would say, listen, I could fix this in half a year.
Do you think Trump is, I mean, I read someplace where Trump, he's setting up this entire economy to bring it down himself, where, because he understands that we can't sustain the debt. Government cannot be sustained because we know the debt ceiling vote is coming up in March, and we're already in 20 trillion worth of
Yeah,
debt.
but that's just going through the waves. It doesn't mean anything.
So do you think he'll just raise the debt ceiling and just...
Yeah, just want to make one remark that, first of all, I didn't say the economy is going to drop dead from the third quarter of 2017.
Okay.
It could, but it could take half a year or a year also. I think the debt ceiling is not going to be a problem.
I mean, if they raise the debt ceiling, we're just going to add more and more debt to the problem, actually, because if they do this and let's say the government continually spends and people start losing jobs, how does the people pay the interest on the debt?
Well, you have a big problem. In Europe, if they issue 10 or 15 or 30-year bonds, the local population buys it up. Now, the Chinese are sitting on a big pile of U.S. bonds. If interest rates go up and the dollar goes down, they're losing too much money, so they might start selling. So you can say, what's the economic reasons? No economic reasons. They don't want to lose too much money. They're going to sell the bonds, and interest rates are going through the roof. So the whole system is dependent on one of another. It's just waiting until the Chinese say we had enough of the losses. We're going to sell our bonds. And then there's no stopping anymore. Then you have a situation like you had in Greece and South Europe at the time, is that although the economy is weak, interest rates are going through the roof because nobody trusts anymore. And if you want to take a loan, you have to pay a lot of money. So that's the worst of all situations.
So, I mean, right now, the Chinese, they are selling treasuries right now. They've dumped quite a bit. Can't the Fed just continually purchase the treasuries that are being sold?
That's a good question. I don't have insight in that. I would think it's too much, but I can't answer that question.
Because we know that their book is like, what is it, like 4 trillion. They bought up a lot of toxic real estate. They bought a lot of treasuries. And, many people are out there saying that, they'll just keep buying it. But, there has to come a point where they can't do this anymore. I mean, it's unrealistic. We know that Trump's budget director was out there and he made an announcement that the 20 trillion worth of debt is really unsustainable right now. We have a major problem in this country. So they are recognizing that we do have problems.
Well, everybody's recognizing, but they like some protectionism. And although I think Trump is doing the right thing, one of the reasons of the depression of the 30s was protectionism. It repeats itself exactly. Now the problem is, Roosevelt had big minuses, but for every dollar that he had a minus, in the end, in the 40s, they paid back 10 cents because of the inflation. So if there's not going to be inflation, they really have a problem. And if short-term rates go up only 0.5%, they're in huge trouble over there. I don't know how they're going to get out of it.
I wanted to get into the petrodollar. I don't know if your analysis or your cycles look at this, because we see what's happening in the Middle East, where we know the U.S. wanted to get into Syria, then maybe eventually move into Iran, and they had regime change in many of the countries out in the Middle East, but we see there's many problems, especially with Russia being in this area. Is this going to be a huge problem where these countries stop using the dollar to sell their oil, to sell the oil using the dollar? Is this going to be a big problem?
I don't think so, because the euro is around against the dollar, a little bit less than par. And it was 50% higher, and they still didn't want to calculate their oil price in euros. They're so used to dollars. I think they're going to stay in dollars. And if not, then I guess the American government are going to pressure them not to do it. I don't think that's going to happen.
So you don't think these other countries like Saudi Arabia, Libya, Lebanon, and the rest, you don't think they're going to sell their oil maybe using the Chinese yuan or the Russian ruble? You think they're going to stick with it?
That will take a decade. I think will take such a long time because everything is connected to the dollar.
Okay, so you think the dollar is going to remain the reserve currency of the world?
Right.
So you don't see anything in your cycles or any in your analysis saying that the dollar will be discontinued and not be the reserve currency of the world?
Well, to tell you honestly, I haven't looked at cycles. I can look up to 40 years, but I haven't looked at that. I can come back to you and take a look at the very long-term cycles of the dollar and see what's going to happen. But like I said, I just looked at a couple of years, not at the very long term. By the way, I want to mention that after 2021, we'll have a huge rally in the stock market. The Dow can go to 50,000, 60,000. Now, one reason could be is because the dollar collapses, so 60,000 doesn't mean much on the Dow. I don't know how to make the connection, but the huge bull market is going to start after this is over.
After everything kind of falls apart, you're saying that everything's going to start improving afterwards, and you don't know why. You're just looking at your information, and this is what you're seeing. So, are you not just the market, but is the economy also going to improve during that period, like employment, manufacturing, and all that? I mean, do you see that also improving during that period?
That's too far away. That's 5 years away, and I didn't look at the very long-term cycles.
So going through, for the last question here, for going through the rest of this year, so the third quarter, you said the market's going to come down and we're going to see, things start to happen. What happens after that, maybe by the fourth quarter and going into 2018? How many times is the market going to go up and down during this period?
Well, it could be 4 or 5 times. Our first cycle top is the end of the first week of February. So it's interesting to watch what's going to happen in, 1.5 weeks. Mm-hmm. So I expect a correction and then one more time up into the third quarter of 2017. That's at the moment much more important than what happens next year. And from 2017 late until 2021, we'll have 4, 5, 6 rallies. You can do an overlay of the Nikkei that topped in 1989 and do an overlay with the Dow. And these things go pretty much the same direction. So if you see how many intermediate rallies there were in the Nikkei for the last 20 years, then you can see what happens to the Dow.
Charles Nenner, thank you very much for being on the X22 Report Spotlight. Once again, how can people see all your work?
Yeah, you can go to Charles Nenner Research Center and you can take a look. I advise people to look at the about 100 television presentations, so we explain how we do it. And since we're so sure that everything proves itself, for a couple of months you get the research for free. Since it's a very difficult year, I would advise people just to ask for the research. You can sign in and send a message, and then we put you on the list. So it's Charles Nenner Research Center.
I'll put all the links at the bottom of the video, make it a lot easier for people to just click on it. They can go right over. Once again, thank you very much for being on the Spotlight.
You're welcome.